Welcome to the Economic Update. I'm joined again by Bob Keane. Welcome, Bob.
Thank you, Jason.
As always, it's been another exciting month, hasn't it? We've had the US Fed raise interest rates, we've had the process for Brexit commence, we've had Obamacare voted down in the US, and we've had 59 Tomahawk missiles fired at Syria. But the interesting thing for me is that the market just seems to shrug this stuff off and keep moving forward, doesn't it?
Yes, and the market is surprisingly resilient given these global political risks. In the case of what happened with Syria, that's a key concern. But for now, there doesn't seem to be an intensification of that conflict in terms of American involvement. What was also a focus was European political risks. So we had a Dutch election in March, and the outcome was that the populist didn't gain support and didn't form government. So it looks like the European Union will hold together, but we still have the French election April-May. That concerns us. And markets have generally been surprisingly resilient.
What about the US markets? How have they performed?
Well, the US markets were flat in March. They made record highs in early March, but since then they've basically gone sideways. So what we're seeing in terms of President Trump is still the bold promises, but the lack of policy follow through. So Obamacare is one example.
Yeah, so I want to talk to you about the US market valuation. I mean, if you look at the Schiller PE, which is a very simple valuation metric across a 10-year earnings cycle, when you look at that number, it's 29 times earnings, and since 1880, it's only been higher on two previous occasions. That was 1999, just before the tech bubble burst, and 1929, just before the US Great Depression. So how are we positioning our portfolios with that context in mind?
The Schiller Cape is a warning sign that the American market is significantly overvalued. But you can use also other measures such as price to book, as well as forward price to earnings ratio to get a similar story. Now, so we have some concerns about the American market being overextended. And from that point of view, what we've done with our portfolios, we have a significant cash weighting in those portfolios. So we're waiting for better opportunities to use that cash. We've also diversified the portfolio. So we have asset classes such as the low correlation strategy that basically have limited exposure to the share market. And that will help insulate the portfolios in case there's a downside risk.
Great. Turning our attention to the Australian market, how has the Australian market performed over the last month?
Well, the Australian share market did remarkably well. It gained about 3.3% for the ASX 300. And what we saw in terms of healthcare, consumer stocks, as well as energy shares, they did particularly well with gains of about 5%. So what we can see is that stable global bond yields, as well as Australian bond yields, and the view that the Reserve Bank is going to keep interest rates on hold here over coming months has helped support the Australian share market.
Yeah, I wanted to ask you about that. So the Reserve Bank Governor, Philip Lowe, has been in the chair now for about 1 year since taking over from Glenn Stevens. How have you seen the RBA shift over that period of time, if at all?
The commentary that comes from the Reserve Bank has shown more focus on financial stability in terms of credit growth and the housing market, and less concern about price stability in terms of the inflation performance. And what's important about the new RBA governor is that with these concerns about the housing market, you've seen very strong gains, particularly in the Sydney and Melbourne housing market. What he's basically been telling the market is that there's limited scope for further reductions in cash interest rates in Australia, because any further reduction may accelerate those house price gains. So it's an important change in signal.
Okay, lastly, what do you think should be top of mind for investors over the coming months?
Well, still the President Trump's policy agenda, whether it actually gets implemented. So, he's made some very bold promises in terms of corporate and income tax cuts, as well as higher infrastructure spending. And yet there's some doubt whether he can actually fully implement that program, given that the Obamacare, the repeal of the Healthcare Act in the United States, face congressional opposition within his own party. The other issue is European political risks. So we have a French election in April-May, And the leading candidate there, Miss Marine Le Pen, has advocated that France should hold a referendum on membership in the European Union. So potentially, if that occurs, then there may be another Brexit possibility. Then we have in Australia, obviously the housing market is a concern, how exuberant it is, and what is going to be the response by both the Reserve Bank in terms of interest rates, as well as APRA. We've seen the prudential regulator now announce some increased scrutiny and some increased limits on loans to investors for housing purposes.